Most traders lose money not because they don't know how to trade, but because they overcomplicate their strategy. Now, let me show you 3 simple steps you can use to make money in the market. The first thing you need is your trend. The second thing is the market structure. And the last thing is liquidity sweep. And this is how you do it. You first have to look for your trend. Is the market trending bullish or bearish? If the market is trending bullish, creating a series of high highs and higher lows, you want the market to be sweeping the lows to create new highs. And if the market is creating a series of lower lows and lower highs, you want the market to be sweeping the highs for it to be able to create a new low. For the bullish scenario, we have 4 steps or 4 types you have to look out for. And then 1 is when price is creating, you just break structure, and the level that caused break of structure is our liquidity zone. So price must come to that level, strip the liquidity, and then print a new high. All right. And our second scenario is the price must create a 2 break of structures to the upside. To first break of structure, second break of structure, and which level caused the recent break of structure? It is this level, right? So this level right here. So price must come below this level and then push all the way to the upside. Price must do something like this: break the first structure, pull down, break another structure, and then push back to sweep this liquidity over here and then create a new high. And then our last but not the least scenario is when the market creates a break of structure, a series of break of structure to the upside, 2 or 3, and then we'll drop all the way to this last level to grab the liquidity and then push all the way to the upside. And our last scenario is when we get our direction to be bullish, but the market is trending to the downside. And that one, we wait for a change of character to form, the market to sweep the liquidity below, and then continue its bullish momentum. Right? Now let's get to the charts, and then I'll show you some real examples. So this is gold XAU USD on a 15-minute time frame. And let me show you how this strategy works. So you can see over the past weeks, the past months, gold has been trending very bullish. And we know gold, we know the nature of gold. Gold is very bullish always. So we have our direction to be bullish. That means we are looking for sales. Anything that will be of buys is somehow decisive. All right, it's a trap. And now we have our buyers. So what's the next thing you have to look out for is our market structure and then our liquidity sweep, right? So we have this level right here. That's our immediate resistance. And yeah, so let's see how price played out. So market started, and then we get our break of structure to the upside, a clear break of structure with a healthy bullish candlestick. And then if you can look closely, there was another minor break of structure over here. We consider this one too. This is another break of structure. And which level caused this major break of structure? It is this low. So we mark this low as our liquidity, because is this level that caused this break of structure. And there is so much stops here because there are some traders that trade breakout, and traders that trade breakout, when they will eventually enter this position right here, and where will be their stop losses? Their stop losses will be below this level, right? And there are other traders too. They will use this resistance breakouts, and then their stop losses also here. That means there are too many stops below this level and also below this level. So what we look out for? We want price to push back to any of these two levels and then give us a confirmation that they are done sweeping liquidity, and then we join them and trade to the upside. That means we are anticipating markets to push back to this level and then move up, or push to this level and then move all the way to the upside, right? Now let's see how markets played out. So it was just ranging kind of consolidation, and then boom, markets came to this level. And when markets reach this level, we are looking out for the reaction that the market will do to this level, because we have this level here and this level here. Don't know, either this level will hold or this level will hold. So what do? We don't predict the market, we react to the markets, whatever the market will do, and then we react on it. You can see when the markets reach here, it gives us an indecision candle, another indecision candle, and then a very healthy bullish candle. So this tells us that the bulls are now ready to push the market to the upside. And what do? We have to join them. Put our stops just below the range over here, and then we target at least 1:3. And we get a 1:3. Let's see how the market played out. At first, it was just, choppy around this level. Then it started moving up. So at this level, we set break even, because you don't have to keep money on the table. You don't have to leave your money on the table. So you set break even, and then you go off your screen, and then you can see, boom, market smash, take profit. It's easy. And then we ended the day. And when market was moving, it's created another break of structure over here, right? Have another break of structure over here. And which level caused the break of structure? It is this low below here. This low caused the break of structure. Alright. This low over here caused this break of structure. So we are anticipating the market to push all the way to this downside to grab the liquidity. And then there's another break of structure over here. So that means market has probability. This is a break of structure. Oops. This is a break of structure. This is our liquidity level. This is our liquidity level. Our level of liquidity. So let's see how price reacted. How price will react to this level right here. Let's see. Markets tried to break structure over here, but this level was resisting this level so much that market was just failing to break above, right? Market was failing to break above this level. So that means this level right here is very strong. Let's see how price played out. Is there any break of structure? Yes. Here, it's kind of breaking structure, but it failed. And you can see here, there was a break of structure right here. This is a break of structure. And which level caused a break of structure? There is this low right here. So we are anticipating market to push all the way to the downside to grab this liquidity and then rejoin the buys. The market eventually went up, creating another break of structures. Another structure over here. Another structure here. And so on and so forth. So that means this day we won't have getting an entry. And we know that you not trading is also a win, because what if the market give you a setup and hits your stop loss? That means your money has been deducted. Will have a minus day. And since you got no trade, our capital is still intact, right? So since the market created series of break of structures, that means the next day the market has potentials of sweeping, because here's break of structure 1, break of structure 2, break of structure 3, break of structure 4. The market has potentials of dropping all the way to grab this liquidity, grab this liquidity, grab this liquidity, and even grab this liquidity before pushing up to the upside. Let's see how price played out. So we have our liquidity level 1 over here. We have our liquidity level 2 over here. My line is misbehaving. And we have our liquidity level 3. And our last liquidity level is here. Let's see how price reacts to these levels for entries. Right. This is that. Alright. Let's see. I just keep pushing up, pushing, 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 pushing. Okay. Alright. So our first liquidity has been grabbed. And did the market give us a confirmation? No. That means our eyes are on our second liquidity level. And our confirmation is either rejection candles or engulfing candles. Alright. And then the market push all the way to this side, to our third liquidity. That means we have potential. Oops, it's even swept this liquidity over here. That means this is an A plus setup. The market has potentials of moving very much up to the upside. In this trade, you can even target 1:5. And then rise after closing here, it went up and closed inside. So here we can just enter for buy. So our stop loss here, and then we target 1:5, because this is an A plus setup. The market has grabbed too many liquidity in the market, and there is no much liquidity left, right? We are targeting 1:5. Let's see how it's played out. It started moving slow. We are in profit now. Market is moving, and then the day closed without it hitting our TP. The next day the market continued pushing, pushing, very slow but sure. We read that it kept on pushing, and we are almost done for the second day. Yes, to 5 as, and this is our day. Market kept on pushing, and at this point we have already set our break even, right? So that we don't leave money on the table. You can see the market kept on pushing, Okay, close to our take profit. Let's get it. All right, and finally the market hit our take profit successfully. All right, the market finally hit our take profits. Take profit was 1:5, and this is it, 1:5. Very simple and very clean. It took us 1, 2, 3, 4 days, 4 full days to hit a 1:5 TP. And even within those days, we'd have gotten some trades inside this level. Let's see if we'd have gotten some trades in those days, right? And this day, this is where we took the trade. And on this day, you can see there was a breakout structure over here. There's a breakout structure over here, right? There's a breakout structure, and there is a liquidity sweep over here. So whilst we are waiting for that setup to play out, we also got another clean setup right here. And this is a bullish engulfing. Right after sweeping liquidity, this is a bullish engulfing. We enter, we put our stops below the range, then we target at least 1:3. And that is crazy, right? That is how we trade gold, and I've been making so many profits using this simple strategy. Try it out and thank me later. In our next video, we'll do the bearish side of this strategy. Make sure you subscribe, follow for more.